Trading looks easy from the outside. You sit at a screen, click a few buttons, and money either goes up or down. No boss, no commute, no fixed hours. And yet, for the people who actually try to do it seriously, trading quickly becomes harder than any job they've ever had. Not because it requires more intelligence, but because it strips away everything that normally makes work survivable. Most traders come into this expecting freedom. What they find instead is pressure. Endless pressure. Every decision matters. Every mistake is yours. There's no one to tell you what to do next. No one to reassure you that you're on the right track. No paycheck at the end of the week to confirm that your effort was worth something. Just you, the market, and the outcome. That's why so many capable people struggle here. Engineers, business owners, professionals who perform well in demanding roles suddenly feel lost. They start doubting themselves. They wonder why something that looks so simple feels so mentally exhausting. They assume they're missing knowledge, discipline, or talent. But that's not the real issue. In most jobs, the structure does the heavy lifting. You're given a role. You're told what success looks like. You get feedback, guidance, and time to improve. Even when the work is hard, the path is clear. Trading offers none of that. There is no structure unless you build it yourself. No external accountability unless you enforce it. No guaranteed reward for effort. Every day, you decide whether to trade or not, where to enter, where to exit, how much to risk, when to stop. And every one of those decisions happens under uncertainty. That level of responsibility wears people down. Not all at once, but slowly, quietly, over time. This is the part most people never realize. Trading isn't difficult because it's complicated. It's difficult because it exposes you. And until you understand that, it will always feel harder than it should. Part 2. Why normal work conditioning fails in trading. To understand why trading feels harder than any other job, you have to look at how people are conditioned to work in the first place. From school to employment, most systems train you the same way. Show up, follow instructions, put in effort, get feedback, improve. The relationship between effort and reward is clear enough that you can trust it. Even when progress is slow, you know you're moving in the right direction. Trading breaks that relationship completely. In most professions, structure protects you. Deadlines tell you when to work. Roles tell you what matters. Managers tell you whether you're doing well or not. Even mistakes are softened by time. You don't get punished instantly. There's space to reflect, adjust, and recover. The system absorbs some of the pressure for you. Trading does the opposite. It removes the system and places everything directly on you. There is no schedule unless you create one. No task list unless you define it. No one to tell you that today was productive or wasted. Feedback is immediate, blunt, and financial. One decision can erase weeks of progress, and the market doesn't explain why. This is where many traders start to unravel. They apply the same logic that worked everywhere else. More screen time, more analysis, more effort, more activity. In normal jobs, that usually leads to better results. In trading, it often leads to worse ones. Overtrading replaces patience. Overanalysis replaces clarity. Activity replaces selectivity. The brain struggles with this because it expects effort to be rewarded. When it isn't, frustration builds. Doubt creeps in. You start questioning your competence, not realizing that the rules of the environment have changed. What worked before no longer applies. Consider how feedback works in most careers. You complete a project, then weeks or months later you see the result. Promotions, bonuses, recognition, or even criticism come with distance. That delay gives you emotional insulation. Trading has no such buffer. You place a trade and seconds later you're either right or wrong. That kind of instant feedback creates pressure that most people are not trained to handle. And it's not just the speed of feedback, it's the ambiguity of it. In a normal job, feedback usually has context. You know why something went well or badly. In trading, a loss doesn't explain itself. A good decision can lose. A bad decision can win. The market doesn't reward behavior consistently in the short term. That inconsistency makes it hard to learn in the way people are used to learning. This is why trading feels unfair. Not because it is rigged, but because it doesn't follow the rules people expect work to follow. You can be disciplined and still lose. You can be careless and still win. And over time, that erodes confidence if you don't understand what's happening. Another factor that makes trading uniquely difficult is isolation. Most jobs involve other people, colleagues, teams, clients, managers. Even when work is stressful, you're not alone with it. There's shared responsibility, shared perspective, shared pressure. Trading removes all of that. Every decision is private. Every mistake is silent. Every doubt stays in your head. That isolation amplifies emotion. There's no one to sanity check your thinking in real time. No one to tell you to step back. No one to absorb the stress with you. Your internal dialogue gets louder. And if that dialogue isn't trained, it turns against you. Then there's the issue of delayed validation. In most jobs, progress is visible. You see tasks completed. You see projects move forward. You see signs that your effort is adding up. Trading often offers long periods where nothing seems to work. Losses cluster. Progress stalls. And there's no guarantee that persistence will pay off in the near term. That's incredibly difficult for the human mind to tolerate, especially for people who are used to being competent, used to being rewarded for effort, used to feeling in control. Trading removes that sense of control and replaces it with uncertainty, repetition, and delayed payoff. When people say trading is stressful, this is what they mean. Not the charts, not the indicators, not the strategies. It's the constant exposure to uncertainty without external structure or reassurance. It's the need to regulate yourself every single day without a safety net. By this point, it should be clear why trading breaks so many people. It's not because they aren't capable. It's because the job demands a type of psychological self-management most people have never had to develop before. And without understanding that, trading will always feel like you're pushing uphill. Part 3. The shift that makes the job survivable. Here's the moment where the story usually turns. The traders who last don't discover some hidden shortcut. They don't suddenly become smarter or tougher. What they do is far quieter than that. They stop expecting trading to feel like a normal job. And once that expectation is gone, the difficulty starts to make sense instead of feeling personal. Most people fight trading because they keep waiting for it to reward them the way other work does. They wait for confidence to arrive. They wait for consistency to feel comfortable. They wait for effort to translate cleanly into results. When none of that happens, they assume something is wrong, either with them or with the market. That assumption creates friction, and friction is exhausting. The traders who survive make a different shift. They accept that trading is not designed to feel safe. It's not designed to feel validating. It's not designed to make you feel productive every day. Once you accept that, you stop trying to force it into a shape it will never have. You stop arguing with the job. The first shift is building structure where none exists. Profitable traders don't rely on motivation or mood. They decide in advance when they work, what they trade, and when they stop. They don't ask themselves every day whether they feel like trading. That decision was already made. Structure becomes a substitute for willpower. Without it, every day turns into a negotiation, and negotiations drain energy fast. The second shift is redefining what productive work actually looks like. In trading, most of the job is waiting. Waiting for the right conditions. Waiting for clarity. Waiting for your edge. For people conditioned to equate activity with progress, this feels wrong. It feels lazy. But experienced traders understand something most beginners don't. Forcing action is often the most destructive thing you can do. Doing nothing is not avoidance. It's part of the job. The third shift is learning how to handle feedback properly. Trading gives you constant feedback, but that feedback is noisy and misleading in the short term. One loss doesn't mean you're wrong. One win doesn't mean you're right. Traders who struggle treat every outcome as a verdict. Traders who last treat outcomes as data points. They zoom out. They care more about whether they followed their process than what happened on a single trade. That distance protects them emotionally and keeps decisions clean. The fourth shift is normalizing uncertainty instead of trying to eliminate it. Most traders waste enormous mental energy trying to feel certain. They look for confirmation. They wait for perfect setups. They want to know what will happen next. Profitable traders accept that uncertainty never goes away. They stop trying to predict and focus on reacting well. Once uncertainty is accepted as permanent, it stops being stressful. It becomes background noise. The fifth shift is changing how success is measured. In most jobs, success is visible. You complete tasks, you hit targets, you receive recognition. Trading doesn't offer that. So profitable traders create their own metrics. Did I follow my rules? Did I manage risk properly? Did I avoid forcing trades? These questions matter more than profit and loss on any given day. When success is defined by execution, confidence becomes stable instead of fragile. None of these shifts make trading easy. That's not the point. They make it survivable. They reduce unnecessary friction. They stop the constant internal conflict. The job is still hard, but it's no longer hostile. And that difference is everything. You can see this clearly when you look at traders who burn out versus those who last. Burned out traders are always tense, always reacting, always trying to control outcomes. Traders who last look calm, not because they don't care, but because they've accepted what the job demands. They've stopped expecting it to behave differently. This is also why many traders fail right before things start to click. The early phase of trading is psychologically brutal. There's little reward, constant doubt, and no external validation. Without the right framing, it feels pointless. But the traders who push through aren't pushing blindly. They've reframed the difficulty. They understand that the discomfort isn't a sign of failure. It's a sign that the job is doing exactly what it's designed to do. Once that understanding is in place, something important changes. The pressure becomes manageable. Decisions slow down. Emotion stops driving behavior. The trader isn't trying to win the day anymore. They're just doing the job. And that's the moment trading shifts from overwhelming to workable. The difficulty never disappears. It just stops feeling like an enemy. Part 4. The job most people quit too early. At some point, trading stops being something you're trying to conquer and starts becoming something you're responsible for. This is the identity shift most people never make. Struggling. Traders see trading as a test they need to pass. Profitable traders see it as a job they need to do. That difference sounds small, but it changes how everything feels. When you see trading as a test, every day feels like judgment. A losing day feels like failure. A winning day feels like relief. Your emotional state rises and falls with your P&L. That's exhausting, and it's not sustainable. When you see trading as a job, outcomes matter, but they don't define you. Some days go well, some don't. You show up, you execute, you review, and you move on. Just like any serious profession. This is where the job starts to feel boring. Not in a negative way, but in a grounded way. There's less drama, fewer emotional spikes. You're not chasing excitement anymore. You're managing risk, waiting for opportunities, and protecting your mental energy. The work becomes repetitive, structured, quiet, and that's exactly what most people can't tolerate. Most traders quit because they mistake boredom for stagnation. They assume that if trading doesn't feel intense, they must be doing something wrong. But intensity is not a sign of progress. It's usually a sign of emotional involvement. The traders who last understand that calm is not complacency, it's control. The hardest part of trading is not learning how to enter or exit. It's learning how to live with uncertainty every day, without letting it leak into your decisions. It's learning how to sit still when doing nothing is the correct move. It's learning how to take responsibility without needing constant feedback or reassurance. Very few jobs demand that level of internal regulation. That's why trading breaks so many people who are otherwise capable. Nothing about the market gets easier over time. Losses still happen. Drawdowns still come. Doubt still shows up. What changes is your relationship with all of it. You stop fighting the difficulty. You stop expecting comfort. You stop waiting for trading to feel good before you take it seriously. And once that happens, the job becomes manageable, even if it never becomes easy. This is the part most people don't like to hear. Trading doesn't reward effort, intelligence, or persistence on their own. It rewards alignment. Alignment with uncertainty. Alignment with process. Alignment with reality. Those who accept that early give themselves a chance to last. Those who don't usually burn out, not because they weren't good enough, but because they were fighting the wrong battle. If this perspective resonates with you, keep following the channel as we share more trading insights, real trading stories, and practical motivation in future videos.